Thank you very much, Professor Elm, for the kind introduction, and I want to thank the Fondazione Centesimus Annus for the invitation. It is sad that I cannot be physically in my home city of Rome to make this presentation, but I'm really glad to be able at least to connect to you virtually. I have a number of slides to present, and I was told they would be shown, and it would be great if that could start. From the next slide, please. Thank you. This is really a crisis like no other. It is like no other because of the speed and the size of decline in world economic activity. It is a crisis with no other because we've had severe recessions, but nothing like this since the Great Depression. And the typical recession is something different. It is a contraction, typically in investment, as firms wait for more certainty about the future. Maybe consumers hold back on consumption of durables like cars to see what the future will bring. But generally, consumption of non-durables is typically more resilient. But this downturn is characterized by collapsing consumption of contact-intensive services. Those include, of course, travel, hospitality, arts and entertainment, restaurants. And the tragedy of this is that those sectors are very employment intensive. They actually have a much larger weight in global employment than they do in global GDP. They involve a lot of people, a lot of young people, a lot of women, a lot of people with relatively low skills. And it is really poses a big challenge to policymakers in terms of thinking what to do to protect these workers. Another extraordinary feature of this crisis is the importance of voluntary lockdowns and social distancing. This is not a financial system collapsing. These are governments that decide, correctly so, to limit economic activity to prevent a further spread of the virus, or people that decide to behave in a way that is consistent with reducing the probability of getting infected. Another factor that is absolutely extraordinary has been the nature and the size of the policy response. Governor Villeroy alluded to this earlier, but clearly the drastic action taken by central banks and also fiscal authorities has really prevented a much worse economic catastrophe than the one we're living through. And I would say the final extraordinary factor is the extreme uncertainty that we are facing. We already, as a profession, as economists, are pretty shaky forecasters. It's a very dicey business to predict what is going to happen to the economy. But under current conditions, the uncertainty is multiplied by the fact that it depends crucially on the evolution of the pandemic, and something we really are still struggling to understand. Next slide, please. I want just to give you a brief flavor of how we see the global economy performing over the next few years. And I have here a really super quick summary. Normally in these presentations, I would have charts backstopping all these points. But let me tell you in a few words how we have seen things in the past few months. You've had a dramatic contraction in the second quarter of 2020, particularly April of 2020, when economies around the world went in lockdown. In China, it happened a bit earlier, but for the rest of the world, it was really the second quarter of 2020. We see signs of a strong pickup in activity in the third quarter, the one that has just concluded, but the recovery is still partial. So clearly activity is coming back, but is clearly not at the levels that it had prior to the pandemic. We've had many improvements in the economic situation in most advanced economies, but some emerging and developing economies, and I'm thinking in particular of India, given its size, are experiencing really dramatic contractions. The one country that is really performing much better than the rest of the world is China, where the recovery is really on a much stronger footing, and activity this year will exceed pre-crisis levels, unlike in the rest of the world. Two more aspects I should stress. The positive one is that financial markets have remained remarkably optimistic about the future, which has been great. It has prevented financial crises around the world, has prevented the majority of potential debt crises. But the tragedy is that case loads are still rising worldwide. They're rising in Italy, unfortunately. They are rising across Europe. They've been high in the US for a while. It is still a very difficult situation. We're clearly not out of the woods. The next slide, please. This is just a slide that shows you the size of new confirmed cases and unfortunately fatalities. You see that the silver lining in some sense is that fatalities have not risen in proportion to the number of cases. Fundamentally, increased testing has increased the number of people that are asymptomatic, that are actually tracked, but also there have been improvements in therapies. But we really have to pray for science to come to the rescue over the next few months and providing us with further improvements in therapies and ideally a vaccine that is widely available and distributed. If we could move to the next slide, please. I referred earlier to the action that governments have taken. These charts illustrate some of those aspects. I would just focus, please. I think that somehow the charts didn't convert very well in the video, but let me tell you that governments have announced drastic fiscal measures amounting, as you see for advanced economies, you can see from the second graph, about 20% of GDP if you include the so-called below the line measures. That is, measures that make financing available, that basically backstop lending by banks or other financial institutions. Now, not necessarily direct outlays by governments, but governments may be called in case these loans are not repaid. Unfortunately, the other charts do not show as well, and I will just skip this in the interest of time, but just keep in mind that were it not for the drastic action taken by the Federal Reserve, by the ECB, and then by major governments in terms of fiscal policy, we will be talking about a much worse economic situation than the one we face. If we could go to the next slide, please. You know, this time, when we produced our World Economic Outlook, we normally have forecasts that extend over a 5-year horizon. In April, we did not do that, given the extreme uncertainty. And this is the first time we actually stick our necks out a bit and do a forecast that goes a couple of years below, beyond the 2021 period. Of course, to make forecasts that go beyond the 2 years, you have to decide what type of assumptions you make about the pandemic. And fundamentally, the assumption we make after these long discussions with the WHO, with virologists, with epidemiologists, has been to assume that by the end of 2022, the pandemic will be under control. We all hope this will happen earlier. It may well happen earlier in advanced economies that get earlier releases and availability of vaccines, but we're still in the dark on when that is exactly going to happen. And if we could move to the next slide, please. I just put some numbers for you to give you a sense of how dramatic the contraction is. And I want to start with the advanced economies, and these are our projections for 2020 and 2021, and you see them in red. What you see in black are how our view about the severity of the pandemic has changed since June. So if you focus on the red numbers, you will see for the world, we have a global contraction of the order of 4.5%. Just to give you a sense, the global financial crisis of 2008, 2009, so GDP fall in 2009 by a fraction of 1%, much less than 1% globally. So this would give you a sense of how dramatic this contraction in activity is. And in part because you have economic activity closing and then reopening, there is a big rebound in 2021. But it is in part a rebound simply because you are coming from such a low base, because a lot of the economies were shut down in 2020. You see, for instance, that for advanced economies, we don't recover the level of activity of 2019 by 2021. We have to wait until 2022 to get to the same level of GDP that we were having in 2019. And across the world, you see red, very negative numbers everywhere, slightly less severe in advanced Asia, and more severe in the US than in the Euro area that is more exposed, at least some countries like Spain, like Italy, like Portugal, like Greece, more exposed to the more vulnerable sectors. But still some signs of a slight improvement in the outlook compared to what we were expecting a few months ago. If we could move to the next slide, you will see the picture for emerging and developing economies. And because it's a very heterogeneous picture, we have decided to separate out China from the rest of emerging and developing economies. So if you focus on the fourth column you see under the China flag, you see that despite the shutdowns and the crisis in the during the first quarter of this year, over this year and next, China is expected to grow by about 10%. If you sum 1.9, around 2% this year, some 8% next year. But if you look at the emerging world, excluding China, that is the column just before, you see that GDP in 2021 does not grow enough to even reach the level of 2019. In other words, the fall in 2020 is larger than the rebound in 2021. And the same was true for advanced economies. So we are in a world where advanced economies are shrinking, emerging and developing economies, excluding China, are shrinking, but China is growing by about 10%. It is a remarkable development, and it clearly relates to the ability of China to contain the number of infections, to contain the impact of the virus much more effectively than other countries have been able to. If you think of a number of cases in China, was at least the recorded one, I think 80-something thousand. That is something we are getting in 2 days in France these days, unfortunately. It's just a very difficult situation. And you see that for the rest of the emerging world, it is really a mixed picture, with India in particular experiencing a very dramatic recession. If we could move to the next slide, please. There is one aspect of this. You see all these numbers, and one wonders, well, what does this imply for people's livelihoods? And unfortunately, this implies some 90 million people in 2020 falling in extreme poverty because of this crisis. And this is just one of the numbers I can quote. Of course, things could turn out worse, or they could turn out better. I mentioned how severe uncertainty is. Action by governments could be even more aggressive than it has been. That would be helpful for next year. And of course, the biggest saving grace for the world economy would be advances in therapies or a safe and effective vaccine produced and distributed at the needed scale. That could really make a difference. But unfortunately, we are facing some downside risks as we speak, and literally since we finalized the wheel, things have gotten notably worse, in particular on the front of recurring outbreaks. We have a very, very dramatic number of cases in the past few weeks, and a host of other factors that used to worry us before the pandemic hits. And I won't dwell on them again in the interest of time, and you can see them on the slide, but these are worries that of course have not gone away with the pandemic. If we could move to the next slide, please. I want to show you just one picture that shows in the world distribution of countries, the ones that do not get a lot of airtime. Those are the very small countries that do not weigh much in terms of world GDP. Some may be islands that rely heavily on tourism. And you see this scatter plot on the left diagram that measures on the horizontal axis the direct share of tourism and transportation in GDP. So all the points you see to the right are points of countries that have, you know, a large share of tourism and transportation in GDP. And of course, these are the most affected sectors. And as you see on the vertical axis, those are indeed the countries that on average are suffering the bigger decline in economic activity. And that is really a very dramatic situation for some of these countries. It may not affect a lot of people numerically. These are countries with relatively small populations in general, but still a very difficult situation for countries that often have no alternative to that line of business, really. If we could move, please, to the next slide. One of the consequences, of course, of the crisis is that with governments correctly intervening very heavily to support the affected sectors on the one hand, and with GDP falling catastrophically on the other hand, you will have a very large increase in government debt and a very large increase in the ratio of government debt to GDP. And this is posing severe challenges to countries. It may not pose as severe challenges for now for advanced economies that have access to markets at extremely low interest rates. But for many emerging and developing economies, even if the debt level is lower, access to markets is in no way guaranteed. We've had already a number of debt restructurings, and clearly, in particular, low-income countries have refrained from taking very aggressive fiscal action precisely because they don't have many resources. And the international community has stepped up to some extent with some debt moratorium, but clearly more will be needed to help the countries that are most in more desperate need of support to be able to spend money to save lives, really. It is a very, very big challenge for these countries, but not such a big challenge really for the world community, but we all have to come together to address it. If we could move to the next slide, please. I will close with two brief considerations on policies. I work for a multilateral organization, International Monetary Fund, and of course, we always call for multilateral cooperation, but I think if there is a moment in which this becomes absolutely crucial, it is now. And it goes beyond economics. It is an issue of supporting healthcare systems, of including funding for vaccines, and helping the distribution of those to countries that could otherwise ill afford it. And I mentioned already the need to provide financial support for constrained countries. You know, you may ask yourselves, well, with high government debts, should government be careful? They obviously should be careful about spending in a way that is efficient, in a way that is targeted to those that really need it, but intervention needs to be very large. It is time to fight the war now. It is time to, pour water on the fire, not to save water for the future. It is extremely important to do it efficiently and to do it in a way, again, that does not waste a scarce resource that we have. But it is absolutely essential to support the recovery where reopening is underway. And it is, we need to allow time for the sectors that are more severely affected to come back. But still, there will be a very, very big challenge, which relates to the fact that we don't really know the future of the most affected sectors. We all hope that we can all go back to a more normal social life, to travel, to restaurants, to more contact-intensive activities, to gyms, to discos for young people, but we just don't know when we will be able to do that. And if that is not going to happen over an horizon of 12 months or so, we really have to think about a massive reallocation of resources, which should be a big challenge for policymakers, because again, these are workers that may not have a lot of skills. We all think digital economy is wonderful. It is extremely important to have people that can work in these new areas, but it is not trivial to convert the share of population employed in these sectors into new economy workers at a speed that is sufficient to absorb the people that may be expelled from shrinking sectors. I want to close with the last slide, which is on medium-term policy priorities. And there, clearly, if we could move to the next slide, please. The challenge is to have a recovery that is greener and to use this opportunity to facilitate new avenues for growth, speeding the transition to a low carbon economy, and boosting human capital accumulation. It is really tragic that one other casualty of this crisis has been human capital formation. Again, kids like mine can have electronics, have iPads. They're doing virtual schooling from this wonderful place where I am now for the next couple of weeks in Sicily. They can go to school. They have teachers that follow them. It is not the same as being in person, but the education system works. But this is not the reality of the vast majority of students, not only around the world, but even in the United States. It is a very difficult situation. And we know from many studies that, just months of lost education have really severe costs in terms of earning capacity down the road. It is a challenge to keep schools open or to keep instruction going under these circumstances. I am happy to come back to any of these issues in any Q&A, and thank you very much for your attention. I apologize in closing just for my clothing and whereabouts. I am quarantining in Sicily, and this is fundamentally just what I can wear from here. But again, it's been a real pleasure to address you all. Thank you very much.